This is Alan Bush with ADMIS with the daily financial forecast for Tuesday, September 1st. In the stock index futures, the big news overnight was the weak Chinese factory orders index, causing global equity markets to come under quite a bit of pressure, including U.S. equity markets. We continue to believe, though, that the major central banks of the world have enough firepower left to add more stimulus as needed. Of course, we already have the European Central Bank in the middle of their massive economic stimulus program. We're seeing the People's Bank of China cutting rates now 5 times since November, with additional stimulus likely to come as well. So plenty of ammunition that I think will ultimately rescue this market. May take a while, and I also do believe that the Chinese economy, with their ramped up stimulus, will show a market improvement within 6 months to a year, and that's the normal time frame for central bank intervention of one kind or another to ultimately have an impact on an economy. So we have not, I believe, seen the highs for stock index futures, but it may take some time before we do see the ultimate recovery, as the global economy, I think, will eventually be positively affected by what I would call a coming new wave of economic stimulus from major central banks around the world. Now, moving over to the foreign currencies, the dollar index lower. We continue to believe that the dollar will probably come under additional pressure from a technical and fundamental point of view. Technically, we have seen trend lines broken to the downside. Also, we do feel from a fundamental point of view that the Fed will be very slow to raise interest rates, that being another negative for the dollar index. Also seeing some gains in the euro currency, with unemployment numbers in the Eurozone improving quite a bit. Also, we are seeing the Japanese yen advancing as flight to quality buying is coming in light of the lower equity markets and the weak Chinese factory orders report, and lower energy prices hurting the Australian dollar, in addition to the Chinese factory index that was reported overnight. So of the currencies, I think I would focus on the short side of the dollar index. Now, moving over to the interest rate markets, there was some flight to quality buying coming in light of lower equity markets and the lower energy futures. Also, the probability of a rate increase from the Fed at the September meeting, ironically increasing overnight to 32%. Yesterday it was 28%, which I'm having a very hard time believing that the probability increased in light of these very weak Chinese factory numbers, in fact coming in at a 3-year low. So we continue to believe that the Fed will not be raising rates at the September meeting. In fact, I find it hard to believe that they can raise rates at all this year, even though the consensus view is that if not at the September meeting, that the Fed will raise at the October or probably the December meeting. So we have 3 meetings left. And once again, most analysts believe that the Fed funds rate will be increased this year. My feeling is that they will be forced to wait until next year to raise the Fed funds rate. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.